The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. The S&P 500 now down 19.84. Those are points. It's not dollars when you're dealing with the S&P 500. It's points that you deal with because every stock is weighted a little bit differently. So it's not dollars. It's down 20 points as I speak to you right now. The 10-year Treasury is up 3 basis points, 3.292, hovering right around some technical numbers that I'm not going to get into with you. Just know that our team does understand that. So if you're looking at home loans, our team understands all the technical parts of these things. Mortgage-backed securities down 9 basis points, means interest rates are up ever so slightly. And OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. 30-year conforming loans yesterday locked at 5.95, jumbo loans locked at 5.87, FHA loans locked at 5.758, rural USDA loans 5.775, and the 30-year VA loan, that's the best loan on the market for those who actually earned it, 5.566. Veterans, if you are renting, please hear me. Stop it. Go get your own house. Your rent is exorbitant. You're 100%, you lose 100% on rent. Yes, on interest, you don't get that back. You get home appreciation back. That's yours when the property appreciates. You're paying somebody else's mortgage when you're paying rent. It'll cost you less to get into a lease than it will to start a mortgage in most instances on that loan when you're dealing with a VA loan. So if you are a veteran, if you served, if you qualify, if you have that certificate of eligibility that tells us that you are qualified for a VA loan, go get it. What are you waiting for? Just throw that out there. Why are the markets doing what they're doing? Well, the bottom line here is we're getting kind of confused. Fed Chair Jerome Powell continues to talk tough on inflation today, saying that it is still far too high, and he's committed to doing the job of reducing it. The bond market is reacting negatively, which can come as a surprise. If the Fed sounds too worried that they're so far behind the curve, it can scare the markets. On the other hand, if the Fed were to talk like they have the job in hand and have it under control, the markets could then look forward to lower inflation. We're seeing the previous currently. European central banks hiked rates today, 75 basis points. Our Fed will likely hike rates 75 basis points on September 21st, meaning that their Fed funds rate is finally positive. They have a lot of heavy lifting to do themselves and are way behind the curve. This is pressuring European yields higher and in turn having an impact on our yields. Initial jobless claims, which measures individuals filing for unemployment benefits for the very first time, decreased by 6,000 last week to 222,000, which is the lowest level since May. Continuing claims, which measures those who continue to receive benefits after their initial claims, increased 36,000 to 1.473, the highest level since April. Bottom line, it appears that layoffs and in turn initial claims have been slowing. Companies are realizing it's hard to get people back to work, so they better keep their people. And we are seeing maybe there's a challenge in the JOLTS report, the job openings and labor turnover report. Maybe because it doesn't really check, there are postings in multiple jurisdictions because people are able to work in different areas, the remote working. So maybe that's why those numbers are so high. Once again, California leads the pack in the largest of the first-time unemployment claims at 37,000, more than the next two highest combined. New York at 15,000, Texas at 14,000. So California is number one. If you add up number two and number three, you still don't get to what California is. So once again, California is in the lead. That is the Mortgage Minute brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call. 800 306 1990, 800 306 1990.